Good morning, everyone. I'm just getting everything situated. We're going to get started in one quick second. All right, and we're ready to go. And we are live. This is Travis Witherspoon from Carter Cow Trading. Carter Cow, or Trade with Travis on YouTube. Carter Cow Trading on Instagram. Once again, Trade with Travis on YouTube. Hope everybody's doing very well on this Tuesday morning. I have 7:08. A little bit late. Let's go ahead and get started. I don't want to waste any time. I want to come down to being able to go and take a look at some overall pairs and two trades that I'm actually active in. We'll get into that as well. So I'm not a CTA, so I'm not going to tell you whether to buy or to sell. What I'm going to do is teach you education, and from that education, you can be able to make your own informed decision. Understand the Forex involves risk. It involves risk of being able to make money. Also involves risk of being able to lose money. So please keep that in mind. And understand that past performance is not indicative of future results, which means that if you end up making money yesterday, it's not promised that you're going to end up making money today. So with that being said, showing myself on the screen. Instagram, you already see me. If you want to see what we're doing live, please go to Trade with Travis on YouTube. Make sure that you end up subscribing there as well. I am right now, I'm literally at 40 subscribers, trying to get up to that 100 mark, trying to push up a little bit more than there, and then keep on moving from there, obviously, and keep on going steadily. For the people that are on YouTube, I see you right now. Good morning. For the people that are on Facebook, obviously, I see you all the time. So we're getting ready to hop in. Let's take a look at some overall trading opportunities and be able to go from there. All right, so switching over my screen. From the economic calendar this morning, what we end up seeing is that we end up having a lending survey that actually ended up happening a little bit earlier today. We're going to see how that affected the market, especially the euro dollar, and being able to see if that really affected the market as much. Now, today is supposed to be a fundamental say because we have the Eurozone basically having their lending survey, which is a high impact news. We're going to end up looking at durable goods orders and non-defense orders. Especially when it comes down to aircrafts at 8.30 for the U.S. For the United States dollar. I think that's going to end up affecting stocks more than it would affect the actual U.S. currency. But that is something that we need to pay attention to. Typically, remember, right around that 9:30 time, that's when the NASDAQ 100, the US 30, the SPX 500, and all of them really have their sharp movements for the day. So we have to pay attention to that as well. And then a little bit later on today, we have trim mean CPI for the Australian dollar and CPI for the Australian dollar. So a little bit later on today, we'll end up kind of giving us a little bit of clarification about where the market is going to end up moving for those overall pairs. Now, with that being said, what we're going to end up doing is that I'm going to end up taking a look at the big three. Remember, if you do not know what the big three is, basically that is the three indexes that we end up looking at to kind of get an idea about what's happening with the overall market. By being able to look at those overall, about being able to look at that index, then we can have an idea about what's happening with the market in general. So that would give us a better chance of being able to understand what that is. So the three indexes that we look at is the US dollar index. We look at what's happening with oil, and then after that we take a look at what's happening with gold. And then after that, we have a chance of being able to know what's going to happen with the overall market. So looking at right now, we go based off of the weekly from last week. We end up saying that the market opened up bearish at the beginning of the week, and then after that, just like always, like clockwork, the market ends up going with the dollar on the first day. So you had a slight bullish push yesterday for the overall movement. It wasn't much, but it was a slight bullish push. The market is still considered to be in the sell zone very close to the sell zone right here as we speak. We're looking at it. It's above 80%. 80% is good enough for me to be able to say that it's in the sell zone. We're looking for potential sell trades. We had a counter trend line break bearish on this overall move, so I do expect that this market is going to continue moving bearish overall when it comes down to this trade. If we take a look at what's happening with the daily, we can see that this market has broken below this trend line. Remember, once you end up having a breakout, then you typically have a retest. This market is moving closer towards the buy zone, so it's making the sell trade look a little out of whack when it comes down to it. But I think that we're looking at a little bit of consolidation as well. So remember, this is election season. We may end up seeing this consolidation just because what's happening with the overall election, and there's an indecisive move on what's happening with the U.S. dollar as a whole. And then after that, we have to pay attention to what's happening overall a little bit later on today. We may end up getting a break, and we may end up getting a push below this trend line. If that happens, then after that, obviously, we're looking at being able to sell to the downside and being able to go from there. So we have to keep that in mind while we're going through and taking a look at overall trading opportunities on this one. Okay. Now, U.S. dollar, I consider to be bearish. I don't consider it to be I don't consider it to be like super strong because there's really no push yet, but I do expect that it's going to end up being bearish. It's definitely bearish on the weekly. The daily is considered to be bearish, but I think it's a little bit more in consolidation as well. All right, we'll take a look at oil. Remember, we ended up talking about getting to this trade last week. We ended up having a trading opportunity. We got stopped out on this big move right here, but if you got back in based off of this move again to the downside, then currently you will be up on this overall move. If you're not in, that's because you follow the rules when it comes down to consolidation, which means that you only buy support, you only sell at resistance, everything else does not matter. So we'll just wait and then see how this market's going to end up reacting. If it keeps on pushing down, it's going to move down to $37 a barrel before hitting the support and then possibly moving back up. Now, I want y'all to understand this. When we're looking at this movement, it's very important to pay attention to how this movement is actually happening. We have this quick push to the upside, and then we have a slow grind to the downside. We had a quick push to the upside, slow grind to the downside. So if you do get it at support and the market remains to be at that support, expect that we're probably going to end up getting a quicker push to the upside on this overall movement. So I am kind of, even though I did not get all of the move that we wanted to get, obviously we wanted to sell down to $37 a barrel and be able to get the sale in the buy. If we do catch it in the buy zone and we do get a fair enough price and the market is going to end up moving with us, then let's use that to our advantage and see and basically trade based off of previous history on being able to have a quick push up. Now the market will get into the buy zone when that happens. I'm not looking at placing in a pending sale, a pending buy at that particular point. The only reason why I'm not doing that is because it's not guaranteed that the market will fall directly to that point and just go. But we do need to set an alert and be able to know that when the market hits basically $37 a barrel, we have to be ready to go when it comes down to trading this overall pair. But something we need to pay attention to. I am interested in being able to buy to the upside when this happens, as long as the market remains to be in this one. But overall, if we're looking at the overall move is to the downside, and the market is expected to fall down to 31.38. So that's the reason why we're not placing in a pending sale. If the market continues to move to the downside, let's say if it breaks out of this overall support area and turns past support in the previous resistance and keeps on pushing to the downside, then that means that we have to look to be able to sell. And that sale will be basically a R3 sale. So we can be able to sell with one-sided trading, knowing that we're going to end up getting to this position. So we have a couple options. We're just out of the market and waiting to see what's going to happen. So gold is still sideways. Oil is still sideways. And so we're looking at that with the U.S. dollar. Look at what's happening with gold. We can see that gold was basically in this upward channel. We ended up getting into this market a little bit earlier, got up to $1937. That was actually the fractal high. Fell within this small portion of the channel, then fell out of it to the downside. Now, what also ended up happening while this was moving, this market actually ended up finding a little bit of consolidation as well. Now, the consolidation support is at 1894. Yesterday, we ended up seeing that before the market actually ended up pushing up to the upside. Currently, right now, the market is at 1902. If I'm looking at doing anything, I will look to be able to buy up at support and then see if we can be able to take that all the way up to the extension move, which will be at 1942 for this overall move on the 2-hour, 1965 on the daily for this overall move. Now, let's take a look at the 2-hour, because remember, when the market is in consolidation, the stochastic tends to not really matter when it comes down to this movement. The only thing that we really need to pay attention to, especially long-term time frame, short-term time frames a little bit more. But when we're looking at this overall movement, we have a counter trend line break bearish. Question is, should we be looking to sell right here? The answer is no, because we're in the middle of this consolidation. Remember, it's only two rules. You buy support, you sell at resistance. Everything else does not matter, right? So we go through, take a look at that. We want to see how the market basically ends up falling from here. If we can be able to catch it right around this 1894 area again, then I will look to be able to buy and basically look to be able to get out at 1913, at least for right now. Still a solid trade. It's not everything that we look for, but still a solid trade if that does happen, and it gives us the opportunity. We just have to be aware about it. And once again, just like with the Canadian, just like with let's start over. Just like with oil, you don't want to be too much in a rush. You want to confirm that the market is going to push up. You want to confirm that you're getting in the buy zone before you end up taking a trade like that. So that's that. All right. NAS 100. The market is getting close to the buy zone on this overall pair on the daily. We still have some room to the downside if we're looking at this and we're treating this as a crown fib to the downside. That movement is expected to go to 10,236. With the spike in coronavirus cases, we end up seeing that the market end up having a strong day to the downside. Remember, the Sunday to Monday trade is the most important trade that you end up getting when it comes down to the NAS 100, US 30, and the SPX 500, because you end up understanding about where the market is going to end up going, or you have a high expectation about where the market is going to end up going. On the 2 hour, this trade actually ended up giving us a trade to the downside, and you would have caught that move. If you would have caught that move right around 9 o'clock or 9:30, then you could have made a lot of pips off of that move. Currently, right now, we're definitely in the buy zone. I would be looking for potential buys once the market ends up breaking the counter trend line break. And seeing how that moves. I don't expect that we're going to end up continuing and then breaking the overall A of this movement, but I do expect that we're probably going to end up having some type of movement like this. The market could give us a little bit of a high where the market falls down to the deep 8-6 in which it has, and the stop loss. The take profit will be right around that 12,500 area. If the market continues to push up toward that area, then that means that it will break the A or break the crown fib of this movement, and the market will be continue to be bullish. Typically, when you have strong bearish days like what ended up happening yesterday, even though the market kind of got bought up from the bottom portion of it yesterday, you do start to see that you can get a little bit of a swing to the upside from this movement. Now, if we're looking at this right now, we can see that this market ended up having that push from 11,364 all the way up to where we are with this outer trend line. If this market breaks this outer trend line to the upside and retests and then pushes up from there, then the market will be considered to be bullish. Now, currently right now, the market has completed a 2 hour D extension. With the market completing the 2 hour D extension, we can do this and we can get rid of this fib right here. And we can start looking at this from a downside movement. Matter of fact, let's go back and let's keep that fib for a second. We can look at it, and now we can see that here was our high, and here was our low of this movement. The market currently right now is moving up. I expect that the market will complete at least up to 11,617 before it moves back down to the downside. That matches up with the 50-day moving average. So if you're in this pair, should you be looking at being able to buy? The answer right now is no, because the market has not broken the trend line to the upside. If you were in a buy, should you look at being able to get out? The market is in a sell zone right now. I will look at being able to protect profits. If the market does fall right here at this point, there's two things that can happen in particular. The first thing could be that this market could continue to fall to the, let's see, just give me 1 second. The market could continue to fall and go all the way down to the D extension, which is expected down to be at 10,942. Well, that matches up with what's happening with the weekly 382. If the market falls down towards that area, the market is continued to be bearish. 10,236 is the weekly. We look at what's happening with the overall 2 hour right here on this overall page. Then we can see that that would somewhat be in that area. Okay, it's not all the way, but it would be somewhat in that area for another swing to the downside. As a helpful tip, what I would say is this: if you're looking at being able to sell right now, I will look at selling short term and only being able to scout the market. I will scout the market to the B for this overall move. I would not look at anything else. Better yet, if you want to look at and try to see if you have directional confirmation, I will wait for the market to be able to go all the way down and then trade somewhat to the downside and see if this market is going to end up breaking this 11,359 area. If it breaks the 11,359 area, then the daily doesn't matter because that means that the market is not ready to be able to move yet. So it'll be in the buy zone until it's ready to move to the upside. If that does happen and it retraces and it moves down to the downside, then this will be the stronger trade right here on being able to sell to the downside all the way down to the push zone, which will be to this area. Excuse me. But if we're looking at overall, what would be the better trade? If the market, let's say hypothetically, this market pushes to the upside and then it retraces and push you back in the buy zone. If that does happen, then go based off of the daily position and then look to be able to buy up. First position will be at 11,685, and then after that, you'll continue moving to the 12,500 area for its overall movements. Okay, so we got a couple options on this one. I would not jump in. I would not jump in heavy today unless you end up getting in yesterday and you just traded it based off of the upside movement yesterday. And based off of that large push yesterday. If you got in yesterday based off of that, then congratulations. Basically, you just caught it when everybody else really wasn't, when everyone else got out of it and took their profit. Let's go ahead and take a look at some U.S. pairs. Let's talk about the trades that I'm in right now currently. We go to my active trades. I have 2 active trades right now. The first one is the US yen. The second one is the pound United States dollar. Got into both of these last night sometime. Both of them end up having good setups. One setup is a little bit different, and I'm going to end up talking about that one. I'm gonna look at this move, and if it gives us if it keeps on giving us a downside movement, then we're going to trade it. If it doesn't, then I'm going to be very quick on it and then look to be able to get out. Okay, and that's the US yen. Let's talk about this from a weekly perspective. Let's talk about this from a daily perspective and talk about why I got in. Currently, I'm literally about 6 pips away from the position that I end up getting in, so that may be something to be able to pay attention to. If we look at the weekly overall is bearish. The overall trend is actually bearish at this particular point. The market is moving up to the sell zone, but it's not at the sell zone right now. Currently, right now, we're going through an overall swing where the Crown D extension is expected to be at 99.20. So that is the overall long-term destination of where this market is going to end up going. Now, it doesn't mean that it's going to happen today. It doesn't mean that it's going to happen tomorrow, but it does mean that it's going to eventually fall to that area in my mind. All right. So with that being said, as we're looking at this overall movement, what we can see if we move to the left, we can see that if this market breaks below that 104 area and continues to move down, there is clear space all the way down into the 101 area from here. Now, the reason why this is so important is because the reason why I end up taking this trade. Yes, we looked at trying to get in at 106. If you end up getting in at 106, then that means that, quite frankly, you got in the area that we thought that the market was going to move up to. Currently, you're up 200 pips, and you can be able to manage the trade from there. Congratulations. You end up getting into it when we was up at 105. 105.50, where we thought that the market was going to move. Currently, right now, you'll be up about 80 pips, right? For me, in this position, because I did not take those positions at that particular point, we're looking at pretty much the bottom of the barrel when it comes down to this overall move. The daily stochastic is not necessarily in the best position to be able to get in, but we've seen that this market has been resisting this 104.89 area, which has been somewhat of a pivot. So if this market remains to be below this overall trend line, then that means that I'm going to look at being able to maintain on the sell. Now, the market is coming from the sell zone to the buy zone. The market has not moved into the sell zone as of yet. We're seeing a little bit of slight consolidation, but we do have a counter trend line break. With us having a slight counter trend line break, if this market continues to move to the downside, then the market will push and try to react with this 104 area. Okay, so this is the first area where we need to pay attention to, which will be right around here. If this market continues to push below the 104 area, then the market will, if the market breaks 104, it will keep on moving past 104 to 101. Okay, so that's the reason why I'm a little bit more urgent on being able to take this trade. Now, the only issue with that, once again, is that the market is not in the sell zone. Well, we missed out on that opportunity for being able to trade it that way. The one thing that we do have to pay attention to is that, okay, if we have that trade, do we have a counter trend line break? Yes, we do. We traded it based off a counter trend line break earlier. Do we have a retest? Yes, we have. The market retests slightly. Market retest slightly right here. So there goes your breakout. Your retest was right here. The market has continued to move down at this particular point. Now, the market is in a buy zone, so that doesn't necessarily mean that the market is just going to fall. There will be probably some people looking to be able to buy it back up. Maybe there might be one more chance for people to be able to get back in for a high price, but sometimes you cannot risk that. And I'm just being honest when it comes down to that trade. Sometimes Sometimes the market may end up giving you a slight little push and then pushing right back down to the sell zone again and just hover around the sell zone, kind of like what happened in this area. So you just have to trade what your overall style is. My style is my entries are counter trend line breaks. My entries are retests off of movements and stuff like that. I got the counter trend line break move. The market has pushed down to the downside, and currently right now, I'm a little bit up. I think I'm up 6 pips right now. Now, if the market does push back up to the 104.89 area, yes, I'll be down. But if it does not break this overall area to the upside, then that means that it's giving me another opportunity, and it's rejecting off of this position as well for us being able to sell. And so that's what I'm interested in. That's what I am in right now. If this market falls, this market from a 2-hour perspective will fall down to 103.69. If it breaks 103.69, then that market is going to continue moving to the downside. That's my very humble opinion. If the market breaks 104, then this market will continue moving to the downside. So from that standpoint, this market is an 86% trade to be able to get into for us being able to win right now. If you are not in, what I will end up doing is that I will wait and try to see if we can get a little bit of a higher price. If you can, then take the trade. If you're not, then because the market is in a buy zone, I'll kind of wait and try to see what's happening with this overall move. But currently right now, like I said, I'm only up 7 pips. So maybe if you want to take a chance right here, just understand if you do take a chance, the market will probably end up going against you, at least from the original move. All right. So that's the US yen. US yen, we're in selling. We're active on that trade right now. Pound US. Going back to what we end up talking about on this one, this is an 87% chance of being able to move. The weekly, the pound has been pushing back up bullish based off of the weekly and the daily. We're looking at this overall move. There's some reasons to be able to say that this market is bearish. There's some reasons to be able to say that this market is bullish. I say that we basically hit the right tip of the crown for this overall movement, and we've broken a counter trend line break bullish. The market has not hit the buy zone yet, but it's very close to hitting the buy zone. Currently, when the market ended up, when I was looking at the market last week, it was at 20%. It did not go below that 10% range, but it hasn't went below that 10% range in a while. And the market has still pushed up bullish. So I consider the weekly to be bullish based off of this movement with a counter trend line break. We're looking at the daily. We can see that this market has broken that counter trend line break and has went through a couple phases of ABCD swings. Now, this is in the second phase of an ABCD swing based off of the daily movement. The overall long-term movement is expected to go up to 138 for this move on this daily swing right here. Now, because the weekly is not fully there, what I ended up deciding to do was basically trade it all the way up to this sub-daily D extension, or this 2-hour D extension, because if we're looking at how the market is reacting right now, we can say, because it is election period, the market has not had a decision on if the market is going to be fully bullish or fully bearish. With that being said, short-term trading is better than long-term trading right now. So I am going out to 200 something pips, but that's in a range of how the market has been moving. The market has been moving right around 118 pips a day for this movement. So what I ended up seeing was that we had a counter trend line break that was being reacted to off of the 2-hour. And based off of that counter trend line break off of the 2-hour, we end up having this movement right here. So here's the deal. We're literally right in the starting of this move right here. If we end up getting any more push on this move, this market will start to be able to move up very quickly. This is a prime position to be able to get in right now. I know that I'm looking at the stochastic, and I know I talk about this all the time. The stochastic is not in the buy zone, right? I do agree with that. The market is not in a no trade area for this overall position. But let's go back to what we ended up talking about before. This market has been moving from the sell zone, and it started to move toward the buy zone. It popped its head out for the buy zone. Now it retested again, and it's starting to push up again, right? This is very good signs of the market moving bullish. Now the question is, will it move bullish? Will there be any more push to the upside? Well, that's the reason why you trade. We have this large move that ended up happening over the course of 13 candles. So basically a full day of overall movement, which was 231 pips to the upside. Since then, the market ended up moving down 44 pips to the downside. So you're talking about 44 times 2, 88. 88 divided by 24. So you're talking about 4 days of overall bearish movement, right? So kind of going back to what we talked about with oil, you have this huge push to the upside, slow grind to the downside. Huge push to the upside, slow grind to the downside. There's more people that are interested in being able to buy, and based off of it, and based off of the way that we're looking at it, more than likely, if we do get a push, that push will end up being very quick on this movement. The only issue that I have with it when it comes down to this was that if this market was going to end up having a huge push to the upside without necessarily having much stagnation, it would have happened earlier during the London session, right around 2 o'clock. But we did have a slight push to the upside. So we may end up seeing that the market may grind a little bit. And then after that, once people start to look at it and take it a little bit more seriously, it may start to push up a little bit more. So that is an active trade right there. We got time for one more trade. Let's take a look at the euro. Take a look at the euro dollar. Currently, right now, on the pound United States dollar, literally, I'm right in that same position. I'm up 1 pip for this overall movement. My stop loss was at 1.2850. Take profit is at 133.70. This market has been moving through. This market is moving through steadily on the 2-hour. I would look and see if there's any type of consolidation on the 2-hour if this market continues to move to the downside. But overall, we are up on this pair, or basically we're at break even on this pair. So if you haven't got in, this would be one of those chances to be able to get in right now. Okay. Last pair we're going to take a look at. We're going to take a look at the euro US dollar. Interested in being able to buy on this pair. If we look at what's happening with the weekly is basically in the buy zone, same area as where the pound is for the overall movement. Barely touched right at the 20 mark, barely touched right here, barely touched right there. And we can see that when the market did touch and started to have a little bit more of a bullish push, the market really started to go up. Currently right now, we have that same counter trend line break to the upside. We'll go all the way down to the far right hand side to create the right tip of the movement. But with that being said, this market did complete and retrace down to the 382 before breaking a counter trend line break. So the market is considered to be bullish. It just means that you're not able to risk as much on this overall trade to the upside. Now, with that being said, let's take a look at the daily. If we take a look at the daily, we can see that this market has broken a counter trend line break to the upside. The market is close to the sell zone at this particular point, but we're finding a little bit of consolidation from 1.17 all the way up to 1.19. Now, we've seen that consolidation before, and that happened before the market actually ended up breaking in March, before the coronavirus information actually ended up starting, before it actually fell down about 700 pips to the downside. So we need to pay attention to how this market is going to end up reacting and treat it just like any type of consolidation rules. Remember, that means that you're looking at it as the market falling down to support. If it falls down to support at 1.17, I will look to be able to buy. If it goes up to 1.19 and you're interested in being able to sell, then that would be the only area where you could be able to sell at. Okay, so all of the other stochastics, everything else like that really doesn't matter. Currently, the market is in the sell zone, so I'm not going to look to be able to sell. I will wait a few days for the market to be able to fall down to the buy zone and give me a good area to be able to buy at. I think 1.17 is a solid number to be able to get into, but that means that we have to wait. The market's going to end up falling about 190 pips before it actually doing that. Does that mean that you should sell? Not necessarily. It just means that you should wait and be able to get in. If that does happen, then that means that you have an opportunity to be able to get in with a very good value and support what people actually end up buying it before. Okay, so we have 2 trades in at this particular point in time. We are interested in being, we are in on the pound dollar. We are in on the Japanese yen, US Japanese yen. Currently right now, we can see that we're up 10 pips. We'll see, hopefully that can continue to move and continue to go from there. I thought it was going to end up getting a little bit more of a push during the late night hours in the Japanese yen session, but we didn't. And I thought we were going to get a little bit of a push when it came down to the Euro session, but obviously it's the market is starting to open up in the US. If people are starting to look at this, we may end up being a little bit down at the beginning of the day. And then after that, a little bit later on, we may see that the market starts to move depending on what's happening with the US movement. Now, remember, the US dollar actually ended up having a slight push to the upside, even though that the market is considered to be bearish. We are considering the market to be bearish overall. We say that it's 86% overall trend of being bearish. between all of the U.S. based pairs that we're looking at, and we take that. We take that and use that as serious information because we have it as 100% bearish on the daily, right? Now, that doesn't mean that the setup is ready to go. It just means that we believe that the market is 100% bearish on the daily and 71% bearish on the weekly. So overall, we should be looking at sell trades. I can get into this trade and I can feel very confident based off of what we're looking at for as our percentages to be able to take this trade to the downside. Now it just has to play out. This is where the patience part comes in at. If you like what we end up doing, please make sure that you like the Carter Cow Capital business page. Please make sure that you end up subscribing to Trade with Travis and repost this video to somebody that you think that will be interested in being able to learn more information about what we end up doing. Thank you for, I will say this, thank you for everyone that ended up saying well wishes to my wife. She actually ended up passing a family nurse practitioner's exam yesterday. So excited, so proud of her and being able to do that when the Witherspoon show up. When we end up expressing good news, they end up showing out and sending out good news. All family and friends, thank you for your support and all your well wishes towards her. It was very much appreciated. She was very happy to be able to see all that. When it came down to that, I do appreciate that as well from the Witherspoon household. But like always, plan your trade your plan. I see each and every one of y'all tomorrow morning, and we're going to look for more trading opportunities. Hope we'll see a little bit more profit inside of the net profit, and hopefully we can find some more trading pairs to be able to get into. Let's make money together. All right, take it easy.